Gold just flashed a massive bearish candle at 4,400, and this could be the turning point everyone's been waiting for. Most traders miss gold's biggest moves because they don't truly understand what's driving this market right now. In this breakdown, I'll show you how institutions are quietly positioning, the three forces shaping gold's next move, and my exact trading roadmap for the week. What happens next could redefine gold's path to 5,000 or trigger a deep correction few are prepared for. Here's what's really shaking the market. And that's not all. The dollar just changed the entire setup. Let's break down the three macro forces driving gold right now. Macro outlook, three key forces driving gold. Let's break down these forces one by one. Force number one, geopolitical and fiscal risks. The US faces a possible government shutdown. Pressure is mounting on the dollar while gold quietly strengthens as a safe haven. Tensions between the US and Venezuela are escalating as Washington deploys F-35 fighter jets and two B-1 strategic bombers near Venezuelan airspace. In response, Caracas has activated its Buk M2E air defense systems, reportedly ready to engage any US aircraft under the pretext of targeting drug trafficking groups. Russia-Ukraine peace talks show some progress, but no deal yet. Until a concrete agreement is reached, uncertainty will keep gold supported as a safe haven. That's just the first force, but the second one is even bigger, the US dollar. Force number two, the US dollar dynamics. The dollar remains the most important counterforce to gold. Let's follow its story step by step. DXY technical analysis. Starting with the weekly chart, last week's candle on the DXY showed a solid recovery, signaling continued bullish intent. However, price remains trapped within a triangle pattern, bounded by a descending weekly trend line and an ascending monthly trend line. The index likely needs more time to consolidate before breaking above the 99 resistance area. The zone between 99.80 and 100 is crucial. A failed retest there could form a double top pattern, leading to a potential decline. Conversely, a weekly close above 100 would confirm a double bottom breakout, opening the path towards 101.5 and 104. Zooming further into the daily chart, the DXY is currently holding above its short-term ascending trend line. For 3 consecutive sessions, it has failed to break above the 98.8 resistance. The previous week closed with a bullish pin bar candle, reflecting strong buying interest and potential continuation of the uptrend. As long as the price struggles below 98.8 and 99, and with the overhead weekly downtrend line, further consolidation is expected before a possible breakout toward 99.8, 100. However, if the DXY closes below 98.0, downside continuation toward 97.0 is likely before another attempt to break 99. Here's the catch. The DXY's next move won't just impact gold, it could rewrite the short-term trading landscape entirely. Now let's look behind the charts at the institutional flows shaping gold's next move. Finally, institutional activity. While retail traders are still debating whether gold has already peaked, institutional players tell a different story. After accumulating nearly 30 tons of gold last week, they added another 11 tons early this week, only to offload the same amount as part of a risk hedging maneuver. When capital of this magnitude shifts, retail traders often get trapped chasing moves too late, and that's when the real game in gold begins. Their actions suggest they may still be aiming to push gold toward 4,400 and potentially 4,700 to 5,000 before locking in profits, positioning themselves to hedge against a possible Ukraine peace deal and a potential US dollar rebound. At this stage, however, institutions seem to be observing the market and waiting for confirmation before resuming another round of large-scale accumulation. So, let's zoom in and see what the gold chart is really showing. Gold technical analysis. First, congratulations to those who followed my September 4th, 2025 analysis and bought around 35.12 when the price retested the 3,500 support. You're now sitting on a gain of more than 6,000 pips. That's why it's crucial to subscribe to the channel or join our Telegram to get real-time updates so you don't miss the next major wave in gold. Now, let's break down the gold chart. Monthly, weekly, daily, step by step, here's what the market is really showing. Starting with the monthly time frame, last month's candle was strongly bullish. The key question now, will this month produce a correction candle or continue the upward trend? We'll have a clearer confirmation by the end of next week. Since bottoming at 1,600, gold has surged to 4,400, a move of nearly 28,000 pips. This rally was fueled by four converging forces. The dollar's drop from 114.8 to 96, geopolitical risks in Ukraine and the Middle East, trade tensions under the Trump administration, and fiscal risks, government shutdown in Washington. Ask yourself, how often do we see such perfect alignment? It could take more decades or never happen again. At this stage, peace in Ukraine remains elusive. Fiscal risks are still present, and global markets have yet to find solid footing, all of which continue to support gold's upside momentum in the coming weeks. However, a strong rebound in the USDXY could easily trigger a sharp correction in gold from current levels. On the other hand, if the DXY continues to consolidate or weaken, gold is likely to break decisively above the 4,200, paving the way for a potential rally toward 4,300, 4,400, and beyond. On the weekly chart, after a strong series of bullish weekly candles, gold posted a notable correction. The prior week rose by nearly 4,000 pips, and this week retraced about the same amount, a sign of high volatility. This pullback was mainly driven by DXY's rebound and profit-taking by investors. Yet last week's candles showed a slight lower shadow as price reacted to the 4,000 support zone, indicating some buying pressure. Given the heavy volume and strong bearish weekly bar, gold likely needs time to consolidate before resuming its upward move. If gold breaks below 4,000, the next supports lie at 3,700 and 3,500, though this scenario remains less likely as the broader trend is still bullish. Shifting down to the daily, despite a strong daily correction candle, the D1 trend remains upward, with price still holding above the 20-day moving average. Importantly, we've seen 3 consecutive bullish pin bars bouncing from the 4,000 support zone, confirming the market's buying interest. Gold could potentially rebound toward 4,200, 4,300, and even 4,400 in the coming sessions before any new corrective leg develops. If gold breaks and closes below 4,400, a deeper pullback toward 3,700 or even 3,500 could occur before the next strong rally. So, let's zoom into the H4 chart where things get even interesting. After forming a double top, gold entered a sharp correction, a move we had warned about in our private Telegram group before the decline occurred. Now, price appears to have formed a double bottom, raising the question, is gold preparing for another bullish leg? Let's see what Mr. Market decides. Currently, gold has tested the 4,000 support multiple times and rebounded 1,000 to 1,500 pips each time, confirming this level as a major support zone. Price is now consolidating within a rising triangle pattern with higher lows. In my view, gold may stage another short-term recovery toward 4,180 to 4,200 before the next corrective phase. We've been sharing every bullish wave from 4,000 in our group, so don't forget to join our free Telegram channel to receive real-time trade insights and early signals. This structure gives traders a clear multi-time frame view. Bullish bias remains dominant, but risk management is crucial. All of this brings us to the key takeaway. Why consider buying/sell gold now? Gold remains in a strong bullish cycle, supported by institutional demand and technical setups. However, the DXY rebound is a key headwind to watch. Let's turn that analysis into a practical plan, the exact playbook I'll be following this week. Trading plan, October 27th to 31st. First buy zone, 4,000 to 4,025. Institutional support, round number, probability approximately 90%. Stop loss, 39.99. Targets, 40.97 to 41.27 short, 41.47 to 42.77 mid.
41.97 to 43.77 long. Second buy zone, 4,045 to 40.68. H4 support, rising trendline support. Probability approximately 85%. Stop loss 4,039. Targets 40.97 to 41.27 short, 41.47 to 42.77 mid, 41.97 to 43.77 long. Third buy zone, 4,080 to 41.03 intraday. Support, probability 80%. Stop loss 4,079. Targets 40.97 to 41.27 short, 41.47 to 42.77 mid, 41.97 to 41.97 long.
First sell zone, 4077 to 4200. H4 strong resistance, probability approximately 90%. Stop loss 4201. Targets 4151 to 4161 short, 4105 to 4122 mid, 4073 to 4033 long. First sell zone, 4377 to 4400. All-time height, probability approximately 99%. Stop loss 4401. Targets 4353 to 4313 short, 4253 to 4203 mid, 4185 to 4103 long. Pro tip: false breakout, arrow, wait for retest, arrow, re-enter for clean profits. Gold doesn't move randomly, it reacts to real global shifts. This move hasn't even started yet, here's your chance to be early. Don't follow the crowd, trade with insight. Subscribe to Gold Mastery and join our Telegram to catch the next major swing before it begins. Master gold, master the market, trade smart. This is not financial advice.